Hello everyone, welcome back. In the previous video, we talked about step number 1, revenue, profits and EPS trend. Step number 2, ROE, return on equity, performance and trend. We know that there are limitations to step number 1 and step number 2 because the net earnings is based on the certain accounting rules and assumption. That's why we need to look at the company's cash flow to understand more about the company business because cash is real. So what is operating cash flow? Operating cash flow, or some say cash flow from operation, is the measure of the amount of cash company can generate from their business operation. In general, we would like to see this number positive for most of the time, at least 4 out of past 5 years. If the company continues to make negative operating cash flow, it is actually a very risky business because the company has to find a way to finance their operations either by selling assets, taking loans, selling bonds, or issuing more shares. On the other hand, free cash flow is the amount of cash the company can generate after spending the money to maintain their asset base, such as buildings, property, plant, and equipment. So free cash flow is given by this equation, the operating cash flow minus capital expenditure. So free cash flow is it's just like excess cash the company can generate every year without damaging their core business while making investment in their business operations. If the company is making large investment or large capital expenditure, or in other words, the capital expenditure is more than operating cash flow, it means the free cash flow is negative. If the company is showing a rising free cash flow over time, it means the company is thriving very well in its business environment. Let's look at our case study, Micromechanics. If you look at the operating and free cash flow numbers, they are actually positive for all the time, and the trend are also rising. So this shows that the company is actually doing well in its business environment. However, up to now, we still do not know how close the company's earnings are to actual operating cash flow. That's why in the next step, we need to look at relationship between these two to understand more about the quality of the earnings. I will see you in the next video.